Welcome to Profiletraders. This is Reza and you're listening to my market analysis for December the 15th. So a few sessions back we were very much so in a free fall, and there was a lot of anxiety about what was going on into the junk bond market, and also about the fact that the Federal Reserve was going to hike the rates and that their timing was going to be a little bit troublesome for the market. However, if we go look at the daily, we can see that market stopped exactly at the touch of the main trend line up. And because we became very oversold down there, we are now seeing a bounce to the upside. I also told you that this week was going to be a week with extreme volatility because you have a combination of FOMC meeting tomorrow and as well as option expiration going into the end of the week. It is usually the norm. If you go back and study the market activities in the past, you will see that vast majority of times when the market is weak ahead of option expiration or going into the option expiration, there is somehow a very heavy amount of buying that kicks in going and during the option expiration week. So now the situation is becoming very clear, and that is that tomorrow the FOMC meeting and the results of it will cause two things. One is whatever that it is they are doing is well perceived, and for whatever reason market can clear through 2050, and if we do so, we should then go towards 2059. And any given time that we clear above 2059, this whole area of this structure here becomes target all the way up to 2075. So the very big amount or a very big level of resistance now is 2050. Past 2050 we should target 2059 and then straight to 2075. If there is any kind of a disappointment and market is upset regarding what the Fed will do, then we should very closely watch today's low at 2029.25. If that level breaks, we should then drop to 2021 and then this naked POC at 2014.5. And past that, of course, there is another POC down there at 2000. So tomorrow expect a very wild day. It is the absolutely probably most important FOMC meeting of the whole year. It is widely anticipated that they hike the rates. If for whatever reason they do not so, or if they do so, in any case it will have tremendous ramification for the market, and a huge volatility is going to be created by it. So 2029 on the downside should be our breakdown, 2050 to the upside should be our break up. And as long as we remain within these two parameters, market should most likely be subject to a rotational back and forth and an undecided action as far as direction is concerned. Now let's look at the chart of crude oil. In the last market analysis, I told you the more down we were going to go past 35, the more difficult it was going to see follow through, because we were approaching levels where pretty much oil was becoming very, very cheap, and it was going to be very difficult to drop it further than 35, since that we have already crashed very much so straight from $55-56 to the $35, which I believe was a 10 years low down there. So now very normally we got an oversold bounce. Can we now conclude that this has been real buying due to demand, or was it pure and simple short covering rally? We cannot tell that for sure yet. It is true that in the very macroscopic term we are making higher high, higher lows, but today close at the very middle of the day's range indicates that it's been a neutral session, neither the buyer one nor the seller one. Whenever it's such a case, then today's high will become the main parameter in terms of resistance, and today's low as the main support. So 37.90 to 36.40. If we can break above 37.90, most likely we will go attack the selling tail from this session, and market should and could reach anywhere between 38.70 to 39, at which point in my opinion it will encounter significant long-term resistance. On the other hand, if we do break back below 36.4, I believe the first level of support will come in at 36.85, and if 36.85 doesn't hold, then there is a big possibility that we are going to come back down for another retest of 35. I believe this will also move and fluctuate tremendously with the whole market tomorrow after the FOMC meeting announcement. So keep that in mind. Very big day tomorrow, extreme high volatility. Maybe the best idea would to wait until Federal Reserve announce its decision and then monitor the first reaction of the market. Usually what you get is one direction in response to FOMC decision, then there is a retracement of that move, and then continuation towards that move going into the close. This was Reza with Profiletraders. If you wish to learn market profile, you can get all my 5 courses and 1 year to my trading room from my website, Profiletraders.